Right. Thank you, everybody. I hope you can all hear me clearly. Great. Welcome to the latest Sopra Banking Software webinar. My name is Jo Howes, and I'm the Sales Director for Sopra Banking here in the UK. We've been in the digital banking business for many decades now, and we work with over 700 banks worldwide, providing solutions for financial institutions to engage with a trusted partner for end-to-end banking transformation. And today, I'm delighted to be joined by Jan van Vonno, Director of Research and Thought Leadership at Tink, and also by our in-house expert, Bruno Cambonet. Bruno is Head of FinTech Alliances and Digital Solutions in Product Marketing at Sopra Banking Software. Now, some of you may know already that last month, Sopra Banking and Tink announced an exciting new partnership. And to celebrate this news today, we're going to be discussing all things open banking, from its current state, upcoming impacts, and also its long-term future. Towards the end of the webinar, Bruno and Jan will answer some of your questions during a Q&A session. And you can use the window, which you will find on the right-hand side of your screen, to ask questions at any time during the meeting. And some of these will be answered at the end of the presentation. Now, if you do have any kind of technical issues, do feel free to use the chat tab, but keep your questions in the question tab because that will help us. So, without further ado, I will hand over to Bruno to get us started.
Thank you very much, Jo. And, beyond my role at SBS, I have many reasons to be very excited being with you all today. Indeed, I've been involved in quite deeply into something like close than 10 years already in various standardization initiatives, including the UK OBE-WSTET in France and Berlin Group, where I now co-chairing the advisory board and group. So thank you very much. And Jan, I think you have many things to say.
Thanks, Bruno. And also from my side, welcome everyone. It's a pleasure to be here, and thanks Sopra for the invitation in order to talk about open banking. So I will be talking a little bit about some of the research that we've been doing at Tink on open banking. So my background is I've been working as an industry analyst for 7 years prior to joining Tink, and I joined Tink in October 2018, where we had this opportunity to help make sense of this movement we refer to as open banking. So what I'll be doing now is just provide you a little brief introduction on Tink, and then we can go into some of the trends later on in this presentation. Next slide, please. So first of all, to introduce Tink, Tink is an open banking technology platform that was basically established back in 2012. Today, the company counts roughly 300 employees, and we have operations across Western Europe. We're proud to say that Tink is a licensed account information service provider and payment initiation service provider under the Swedish financial authorities. And Tink is a technology provider to banks, fintechs, and startups. And we're now working closely with Sopra to give our customers the tools they need to build that next generation of financial services. And we're doing that by connecting them to over 2,500 banks via a single API. On the next slide, before I hand it back over to Bruno, I briefly want to share the story behind Tink. And I really think it's worth sharing because when Tink was founded nearly a decade ago, the mission was to enable financial happiness by giving customers control over their finances. And back then, before most people had ever heard of open banking, Tink had already launched one of the first independent multi-banking apps, and it, basically allowed users on their mobile phones to aggregate all of their finances, including their payment accounts, their mortgage information, their investment information, basically giving them a 360-degree view of their finances. And later, this app also started to enable transfers from bank to bank, from account to account, regardless of the mobile banking app. So all within one interface and one experience. And since then, Tink has evolved quite a bit. Tink has established partnerships with some of the largest banks in the world, including BNP Paribas and Nordea. It has attracted over 170 million euros of funding. And basically, this has allowed us to make the first 2 acquisitions of the company earlier this year. The first being Eurobits, the pioneer in open banking and also market leader in Southern Europe, as well as Instantor, a company that is really renowned for one of the best credit scoring capabilities in the market. So, I mean, looking at where we are, it looks like it's just getting started, and I'm actually super excited to talk more about open banking. So hopefully this gives you a little bit of an idea who Tink is, and now I can hand back to you, Bruno, on the next slide.
Thank you, Jo. Okay, so thank you. Maybe a few words on Sopra Banking before jumping into the open banking. You know, actually, with that thousands of experts that we have at Sopra Banking and a turnover which is around 440 million, we have one of the deepest, maybe broadest portfolio of software and services. And Sopra Banking Software is a trusted long-term partner of over something like more than 1,500 customers, banks, and financial entities in more than 80 countries across the world. Sopra Banking has been having an equal capability to address requirements for banks and financial institutions of various size and scope. And we are thrilled to allowing them to innovate and expand their services. Sopra Banking Software is a sub of Sopra Steria Group, which is a European leader in consulting, digital services, and software development, which is counting something like more than 46,000 employees. And generally speaking, in 2019, Sopra Steria generated a revenue of 4.43 billion euros. So let's maybe move to the next slide. Thank you. Actually, as Jan said, you know, open banking has already been a long endeavor, let's say. And, you know, I want to make it clear that actually open banking, even if it was not named open banking at this time, started, more than almost 2 decades ago. So let's come back on what is open banking. Actually, open banking is really about making the banks open to any player in any industry in order for them to use the banking services, which actually serve both parties, banks on the one side and the other party on the other end. It's really about integrating seamlessly any industry ecosystem easily and, well, real time. As I mentioned, yeah, it started a long time ago, and I like to see the PSD, the first one, you know, when we talk about the Payment Service Directive, which was kind of a level playing field or setup of a level playing field for the whole SIPA Eurozone to align practice around credit transfer, direct debit. So it started within the bank. It was not open. It's within the bank. It was open for any single bank, but across all the banks, it was the first step. And actually, what is very, very interesting is that it ignited a movement that now we call it open banking. Remember the Sofort in Germany when it launched its screen scraping capabilities to leverage a new SEPA's credit transfer capabilities. Actually, many followed in this track. And a few years after, a new player appeared on the market, leveraging the API REST concept rather than web and screen scraping. And this was Tink in 2012. So which is already more than 8 years ago, as Jan mentioned. Actually, also in parallel, various standardization approaches popped up. You know, in the UK, if I take the open banking framework that popped up in 2014 with the support of Her Majesty Treasury at this time, this was really the first attempt to define a standard and kind of impose or across industries a standard for open banking. Actually, if I stay on the UK, that's after a few years, when the regulation, the PSD2 regulation in Europe popped up, the UK moved one step ahead and came with the rule imposed by the Competition and Market Authority in parallel with the new PSD2. What is interesting here is that actually, on both PSD2 and the CMA UK, provided and set up rules for two main purposes: security on the one hand, security of the citizen, protect their capability, for fraud and identity and everything, so that their own finance are protected. But also, it was about fostering innovation and enabling competition across this market. Then came new standards, like the OBI, the Open Banking UK, that has been managed by the OBIE, the Open Banking Implementation Entity. It started in 2017 or 2016 even, if I remember well. Then the STAT standard in France, as well as the Berlin Group with next-gen PSD2 in Europe globally. This happened, and we participate to this. And as of now, we at Sopra Banking have implemented our solution across 17 countries already. This is up and running. You have few others here. But what is interesting is now. What is there now? And now, yes, we have the opportunity to embrace the open banking as a whole, like I introduced at the very beginning. We are now working, every standardization, let's say, organization are working on extended use case. I mean, extended beyond compliance. And this happened more than 1 year ago. You'll see the results soon, I guess. So next slide. I want also to maybe say a few words about beyond Europe. Europe, we have done great, I would say. But beyond Europe, many things are happening also. And without going into the detail here, what I would like to show is that these dual driving forces is there all across the globe, regulatory and business. In the last months, you have certainly heard about what happened in Australia and Brazil coming into the picture. It has been a long time, it has been a long run, even if things are popping up now. I remember in the 2015-ish years, I remember discussions in workshops, like in Payment Innovation Forum. I remember one specifically in San Francisco in the US, where the US banks were really sizing the importance of having a level playing field like we have built in Europe. I remember also discussion at this time. I was with Axway, one of our sister company, discussion with ANZ, NAB, and Westpac banks in Australia, where I had to manage workshop to discuss about the different approach to go to open banking, like with UK, with a central body managing both the standard and the operations, or with continental EU approach with a regulation on the one hand, standardization and implementation on the other hand. I remember also discussion with the Monetary Authority in Singapore. If you remember, at this time, they created what they called the Mendeley API classification, where they define more than 400 APIs in order to support the industry's processes across financial services. So you see, the open banking movement has started years ago, and now there is a shift happening in the industry. And maybe Jan, you can elaborate on this.
Thanks. We can feel free to move to the next slide. Yeah, so I mean, ever since Tink was founded, we've been talking about the shift that Bruno was referring to. I mean, it's a shift where we're moving from this old monolithic model where there are one-to-one relationships between financial institutions and its customers. And in this old model, traditionally, the financial institution would be basically the owner or the controller of the data, as well as the infrastructure around it in order to acquire those services. Now, the regulations around the world that Bruno referred to That's moving this industry towards a new model where giving customers or giving users control over their own data is now unlocking unlimited opportunities to improve experiences, increase personalization, and allowing users to get access to the very best financial services that are most appropriate to them. Next slide. So when we're talking about open banking, we're not talking about the UK legislation, the CMA order. We're not talking about a regulation. We're talking about an industry movement where we're describing the exchange of data between financial institutions and third-party providers in order to deliver those enhanced experiences and capabilities in the market. Now, on the next slide, Bruno, I was actually quite excited that in some of your presentations you were drawing from our report from last year. You want to share what some of those insights that you were presenting earlier?
Yeah, sure. Thanks, Jan. Actually, maybe as a starting point, for 2 decades already, across all industries, we know that we need to think in the consumer shoes. That's, 15 years ago or a bit more, we even 20 years ago, we talked about the customer-oriented approach, And well, digital on top of this is really about having everything you need at your fingertips, And with digital, it's real time. This means that you have to cope with various situations of your end customer. I mean, any type, anytime, any type of interaction, anytime, anywhere, obviously, and to make things even simpler. And your end customer journey on top of this will actually vary along the time. So nothing is never now set into stone. Digital is about uncertainty. Now, what is important is that if you look at this slide, if we look now where we are, we see that the develop better digital services is really what is top of the story. And yes, indeed, I'm using some of the surveys I think and YouGov has been providing, which are really interesting. Develop better digital services. We need to delve into this to understand what it is and what does that mean, especially in a customer-oriented, let's say, approach. We need to improve customer personalization. This is interesting, but it goes also together with the last one, reduce costs of customer acquisition. What is interesting here is that if you see a few years ago, digital was seen, and to some extent is still seen, as a mean to reduce costs of operations. It's about using digitalization of processes to reduce the cost of customer acquisition or the cost of operations, generally speaking, and eventually reduce the time to the cost-to-income ratio. What is interesting is that now we are more thinking of a customer first, customer personalization. It appears almost at the same level than develop better the digital services. So yeah. So next slide, please.
Thanks. Yeah, so I mean, on that slide, one of the main conclusions from our last report was it's all digital and it's all focused on the customer experience. But it was a survey conducted early in 2019. And what we found over the course of 2019 is, of course, that all the financial institutions, especially the banks, had been needing to make significant investments in open banking in order to make sure that their APIs and that their access interfaces would be compliant with PSD2. And so this year we actually published a number, and we found that basically the most financial institutions are spending in the range of 50 to 100 million euros on their open banking objectives. Now, this includes operational expenses as well as CapEx. So not all of that is let's say, intellectual property. Some of that is actually external fees and running fees and maintenance fees, but it's a significant amount. Now, what I find also interesting on the next slide is that this number is growing significantly, right? So what we found is that more than 80% of respondents in this survey indicated that their budgets are growing double digits. And in fact, a quarter of them said it's growing more than 30% year over year. Now, like I said at the start, the open banking shift is very significant. And I actually predict that this is going to take at least 10 more years to fully mature in Europe alone. So if we're looking at the markets around the world, it's probably going to take some significant time. But I think looking at Europe and the significant shift and size of budgets should be an example, or at least a reference to what may happen around the world. On the next slide, we can also look a little bit deeper into country-to-country differences. So here we see the respondents that indicated that their budgets decreased, stayed the same, or increased. On the next slide, I just want to bring your attention to the top three. So notably the UK, Belgium, and Portugal. I mean, these are the countries that counted basically the largest number of respondents that indicated their budgets increased. Now, the UK is probably the most mature market when it comes to open banking. It is by far the most TPPs. I believe 48% of all licensed third-party providers in Europe are licensed out of the UK. And we also know that the UK OBIE standard, the Open Banking Implementation Institute, and the standard that they have provided for the APIs for open banking are probably the most mature and most predictable that we see in the ecosystem. So this gives a good foundation for innovation, and we're really seeing that accelerate in the UK as these budgets, open banking budgets, are growing. The Belgian market is actually pretty interesting because until recently, I believe many TPPs were not as happy with the situation in the Belgian market, where the dedicated interfaces, the APIs, weren't at the quality where the TPPs were expecting them. However, over the past couple of months, this has changed dramatically, significantly. So to a point where, in terms of the performance of, for instance, background refresh for all of these APIs, they're really, for many of the large banks, really top notch. So we can see the increase in budget really reflected in the maturity of the APIs. And same goes for Portugal. So Portugal has centralized a lot of their compliance efforts under a single service provider called CIBS. CIBS is a co-owned service provider under the Portuguese banks. And CIBS had already introduced multi-banking, I believe 5 or 6 years ago, under NBWay. However, for the first time with PSD2, the banks are invited to compete for the customer. And we're now seeing more and more banks basically drawing from that budget and looking at how they could innovate for the customers themselves. So this is going to become a really interesting market where we're going to see increased competition between financial institutions, and where TPPs, third-party providers, are going to play an interesting role in enabling that competition. Now, just going to the European on the next slide, European average. So on average, 10% of financial institutions indicate their budgets are going down, but 63% indicate their budgets are going up. So I think that gives significant confidence, especially when looking at the double digits, 80% saying double digits, that this growth will maintain for the next couple of years. But it's what we want to understand is really the returns, right? So on the next slide, one of the questions that we wanted to look at is what is the ROI on all of the spending, on all of these investments, the 50 to 100 million euros. What's the ROI on that? It's quite hard to calculate ROI when you are dealing with both CAPEX and OPEX, and so often a better metric would be the payback period. And so what we found here is that almost 70% of financial institutions expect to see a positive return from their investments in less than 5 years. In fact, 50% expect a positive return within 4 years. And so it shows incredible confidence. It shows that these investments have a business case backing them. But one of my favorite statistics from this is that only 1.4% of the respondents indicated that they don't believe that there's going to be a payback, ROI from their investment. So overall, I mean, these businesses have a clear business case supporting it, but it also shows that these investments are thought through, and that executives will be looking to track the performance of these investments over the course of their maturity. So I'm really looking forward to seeing how that evolve. Bruno, on the next slide, I think Bruno is going to talk a little bit about how these investments are coming together with.
Actually, what I want to share with you is that what's into all this for you guys, because all this is interesting. We've been talking about open banking, you see the momentum, etc. Now, why is there something for you guys? And well, I already mentioned that digital is about having everything at you need at your fingerprints, real time, and this for your own customers. Now, there are several things that are behind this. There is a time to market, because yes, the customer journeys are going to be changing over time. How to make this happen quickly? Can you cope with this and be time to market with the ever innovative customer journeys? How to enhance, the customer onboarding or the customer acquisition, generally speaking. All of this, you need to have a nice way to articulate and to think about new ways of doing things. For example, on onboarding, if you onboard a new account, well, you need to avoid fraud. You may need to have accurate data and to make checks. If you onboard to do a digital lending or loan origination, you will have to make a credit score in order to improve your transformation ratios. The use cases, business case, in order to address these final, let's say, benefits that you may be looking for and you will get through, you need to have a platform or a software that is going to do this for you. And this is what basically we are doing with our digital engagement platform. Now, in order to do it, yes, one thing which is really important is about personalization. How do you personalize? You personalize because of the data you have on your customer. And this data need to be accurate and need to be real, not fake data. That's precisely what we are working with Tink. Tink is exactly providing the accurate data in financial space, and not only the data itself, but the enrichment on data in order to have them make even more sense to be leveraged. Things like insights. This is certainly what is absolutely needed. So, from use cases like talking about personal finance management. What is personal finance management? It's not only about aggregating the data and presenting them into a nice way and even categorize them. It's also to use this in order to really provide more value to your end customer. This is our target. In order to do this, we need data, we need process, we need business services. Basically, this is what we are doing together with Tink. And I guess it's no-brainer for you, but we had to partner with the best company in Europe to provide the access to most, or to provide the capability, the ability to connect most of the customer account data across Europe. That's what Tink brings, and that's how we are using it, leveraging it in order to address these benefits. Next slide, please. If I would summarize, the key message we have been sharing with you here is that, yes, but open banking, everybody has been talking about it, about the opportunities for years now. We have been there, Sopra Banking and Tink, there for years. It's not something we have been suddenly thinking, yes, now we need to go. No, we have been working on it. We have been working in standardization of way to secure the access to customer data, way to share this in a way which is, one, regulated, two, secured, third, accurate and usable through use cases that you need. The other point is that the momentum is now. You've seen all the studies that Jan have been sharing with you concerning the investments. Every countries are investing massively investing into this space. And well, that's a no-brainer now for us. When we discuss together, we realize that we are mature enough to consider that we are in a worldwide game, and we better need to join efforts for your benefits rather than trying to do ourselves and be slow in the market. Well, with this, thank you very much. I'm pretty sure there are a couple of questions. Jo, maybe you.
Yes, thank you, Bruno, and also Jan. That was a great overview of the open banking world and some fantastic insight, I thought. We do have some questions from our audience. If we don't have time to answer all of them today, we will get back to you after the webinar. But our first question comes from Michael, who asks, from your point of view, which countries or economic areas are most advanced, mature in open banking? Jan, would you like to take that one?
Sure. So let me, first of all, thanks, Michael, for the question. First of all, let me just refer back to Bruno's slide with the flags on it. I think that chart accurately represents, I think, where the market maturity is, which is really the vertical axis, where you really see an industry-driven movement versus the regulatory movement. Overall, I mean, looking around the world, if you look at different pockets of open banking and the exchange of data, financial data between financial institutions and third-party providers, and sure, the U.S. and China are, I think, some interesting examples of where open banking is happening, but in a very, let's say, industry-driven way. The U.S. is significantly different to the Chinese market. But if we just move over to Europe, where I think it's really setting an example for what open banking could look like, within Europe, there was also pockets of maturity. So I referred to the UK earlier in this presentation. And of course, I need to refer to Sweden as being also an example of where open banking has emerged before the regulations were even in place. Germany is also a great example where open banking existed prior to PSD2. However, we need to recognize that with the transition to bank APIs and a lot of the FinTS connections being basically discontinued, resulting in many existing fintechs and TPPs that were reliant on data and no longer having access to that data. So the transition of SCA, the transition to PSD2 has actually changed the situation in Europe, where UK and Sweden are now leading the pack in terms of open banking, and where now other countries are going through an interesting transition period in order to keep up. So I think that gives you a little sense of where the maturity is around the world.
Thank you, Jan. The next question is from Rajesh, and Rajesh asks, what do you think banks need to do to drive up adoption of open banking? Bruno, would you like to answer that one?
Yeah, certainly. I've maybe few words. It's a very wide question, to be honest. There are a couple of things that the banks need to do. One, well, firstly, what I would like to say is that there is one strategy fits all. It depends on the bank. But I think the openness, realizing first that maybe the reach to a customer is maybe better done by other players, is one way, at least to be able to address some markets, and to be open to do like Barclays did, with I think this was with Uber, in order to provide their financial services to Uber, to create new services for the Uber driver. This is one thing. So it's a set of mind. Not everything should be centered on the bank services themselves. The bank service can be delivered through a partner. So this is one thing which is more not being in the driver's seat, let's say, but to be able to size any opportunity to better address the market, the full market. Now, driving up the adoption of open banking is to play the game in the ecosystem. So I mentioned one side of it. The other side is obviously to be able to size to partner with others, but in order for the bank itself to aggregate and combine services for the benefits of the customer they have at their reach. And these go through, well, there are lots of conditions in order to be addressed in order to drive adoption. It's about making sure the security of, so I see another question around digital identity. Yes, for sure. I remember the very first discussion we had at the OBIE concerning the digital identity, and across Europe, the different approach concerning the digital identity, which is supported or not supported. But look at what happened in the Nordics region with the bank ID of Norway or Sweden. This obviously have been accelerating the path through digital. But security is not only the identity; it's all about the consent management. It's authentication. And it goes together with identity management, which is formally not addressed by the PSD2 itself. There is the authorization, so the management of the consent, and this go way beyond the identity of the individual. It's also about the identity of the organizations. As a TPP, Tink knows this perfectly well. But when you see the eDES certificate that are used in order to secure the whole ecosystem, so in this case, this is the organization part of it. This is something really important, and you need to size the importance of managing this real time. Real time meaning that the eDES certificate may, at one point of time, may not be valid. But not all the information are there. So you need to take all the, the possible, let's say, measure to improve the security of the ecosystem along the time, and this will evolve. But basically, to make a long story short, adoption of open banking goes through the benefits you will provide to your end customer. So think about which is the best customer journey you can provide. And yes, you need to size the effort in order to set up a foundation. We are very lucky with the PSD2 regulation, because if you have done it rightly, you have a foundation that is helping you to size the whole ecosystem and now focus on the customer use cases and the business case for you. So, and this is what will eventually drive the open banking adoption. So, yeah, well, lots of things to say, I guess, on this question.
Thanks. Thank you, Bruno. Unfortunately, that's all we have time for today. We have lots of additional questions on the chat. I can see that we didn't get round to answering, but we will do that after the call individually with those of you that have made the effort to put those questions on. So thank you. Thank you also for just joining us today. And if you would like to watch our previous webinars on demand or to see our industry insights, you can follow us on social media, or you can go to www.soprabanking.com. Thanks. See you next time.
Bye-bye.
Thanks, everyone.